the sentiment that I'm feeling in Bitcoin is bearishness, actually. So you're the perfect person to talk to, because whenever I speak with you and do an interview, I feel more bullish than ever and need to buy more Bitcoin. So first of all, why do you think people are feeling generally more bearish, and why do you think they should be bullish?
I think there's a natural ebb and flow in the economy and in the community. And so Bitcoin surges up and has periods of extraordinary excitement, generates a lot of adrenaline and enthusiasm. Then there's a celebration, and then people extrapolate straight line to the moon. And then it retraces a bit and consolidates. And then people think, well, it's going to bounce back really fast. And if it chops sideways for a while, there's always a natural human tendency to get frustrated. I don't think we have anything to be unhappy about. The truth is, if you zoom out and look at the 1-year chart, Bitcoin is like up 99%. Mm-hmm. It's like nearly double.
Michael Saylor begins by addressing the emotional swings that dominate Bitcoin cycles. He explains that while many traders and investors feel uncertain during consolidation periods, the broader picture tells a different story. Bitcoin has doubled in just a year. This perspective sets the stage for a larger discussion about why the U.S. should think of Bitcoin not just as an investment, but as a national strategic reserve.
Well, I think Bitcoin's good for the nation, and then the country would benefit. We did buy something like 78% of the entire United States for about $40 million over the past 100 years or so. So I think the United States ought to own a large part of cyberspace, and Bitcoin is the next frontier.
Here, Saylor draws a striking historical parallel. Just as the U.S. once expanded its physical territory through land purchases, he now argues that the nation should acquire its stake in cyberspace through Bitcoin. In his view, Bitcoin is not simply an asset, it is digital land, a finite frontier where ownership today determines economic security tomorrow.
I think the real story in Bitcoin right now is corporate adoption. We've got a consistent acquisition of Bitcoin by the big ETFs like BlackRock, and that's taking up all the natural supply, and they're doing that on behalf of institutional investors. But these 180 companies that are capitalizing on Bitcoin are buying even more than the natural supply being created by the miners, and they're putting upward pressure on the price.
Corporate adoption, according to Saylor, is the defining factor today. BlackRock and other ETF giants are absorbing supply on behalf of institutional clients, while corporations themselves are outpacing new Bitcoin issuance. This dynamic creates the foundation for a supply shock, one that could propel Bitcoin upward as more institutions treat it as digital gold.
So I think Bitcoin's right now, it's like this Mag 7 startup where all of a sudden all the employees got insanely rich on penny stock options, but they can't borrow against them, so they have to sell them. And so they're selling, and then people are saying, well, why are those employees selling the stock? Is that a vote of not confidence in the company? And the answer is no. It's just they have kids to go to college. They want to buy a house, right? They want to live comfortably. They want to do something for their parents.
Saylor compares today's Bitcoin market to an early-stage tech company whose employees must sell shares simply to live their lives. This doesn't signal a lack of confidence. It reflects financial reality. For him, the current selling pressure is temporary and even healthy, as it transfers coins from early holders to long-term institutional investors.
Well, I think you've got two types of companies. You've got operating companies that would otherwise be returning their capital via dividends and buybacks, or they would just be holding low-yielding money markets. And they're choosing Bitcoin as a Treasury reserve asset, so that actually improves their capital structure. It strengthens those companies. There's a lot of those. And then there's a second sort of company, the true treasury companies. They're capitalizing on Bitcoin. Bitcoin is digital gold. The world ran on gold-backed credit for 300 years. The world's going to run on digital gold-backed credit for the next 300 years.
Saylor divides adopters into two groups: companies improving their balance sheets with Bitcoin and those pioneering the use of Bitcoin as digital capital. He envisions a new financial system where digital gold-backed credit underpins global markets for centuries to come, just as gold once did. This is the cornerstone of the strategic Bitcoin reserve idea.
There are a lot of assets, property, the greatest property assets of Western civilization, assets like diamonds, assets like gold, assets like old masters' paintings, assets like land, the Louisiana Territory, California, Mexico, all of Alaska. None of them have cash flows. Right? All of the great things we've acquired in life. I mean, truthfully, if we think about what we want in life, whether it's a spouse, a marriage, kids, they have no cash flows. A house, no cash flows. Right? So the world's full of things, right? A Nobel Prize, no cash flows. Fame, no cash flows. Yeah. Yachts and jets don't have cash flows either. So the world's full of things that are deemed valuable in the world. They have no cash flows. And of course, as we know, the perfect money has no cash flow.
This argument strikes at one of the most common criticisms from traditional finance, that Bitcoin lacks yield. Saylor reframes this by pointing out that some of civilization's most valuable possessions, land, art, even marriage, carry no cash flow. In his framework, Bitcoin's lack of yield is not a flaw, but an essential feature of perfect money.
Gold fits that bill. Bitcoin fits that bill even better, and it's sort of got the digital upside. You know, you can't teleport gold, and you can't program gold to vibrate at 1,000,000 times a second on a computer. So Bitcoin is the technology version of gold. It's digital gold. It's going to be, in my opinion, 10x bigger than gold, but they're the same idea.
Here, Saylor makes the bold claim that Bitcoin will not only rival gold, but surpass it by an order of magnitude. The efficiency, programmability, and borderless nature of Bitcoin transform it from a mere store of value into programmable money, a foundation for future capital markets.
The people that will get Bitcoin will either come out of very chaotic environments, you know, collapsing currency environments where they had to think for themselves, or they'll be at their base kind of scientists, first principles thinkers, people that question everything and derive it.
Saylor believes true adoption comes from necessity and critical thinking. People living through currency collapse intuitively understand Bitcoin's value, while first principle thinkers recognize it through reason. Both groups converge on the same conclusion. Bitcoin is money, and it thrives precisely when legacy systems fail.
You want the volatility to decrease so the mega institutions feel comfortable entering the space and size. And the conundrum is, well, if the mega institution's going to enter, if the volatility decreases, it's going to be boring for a while. And because it's boring for a while, people's adrenaline rush is going to drop. And it's like they had this big high and now the adrenaline is wearing off and they're a little bit bearish. But this is just a growing stage, or, you know, natural for the life cycle of an asset that's monetizing like this.
According to Saylor, the path to mass adoption involves a paradox. Bitcoin must become boring before it can become truly transformative. Reduced volatility makes it viable for trillion-dollar institutions, even if it dampens retail excitement. What looks like stagnation today is really preparation for its next leap forward.
JP Morgan said gold is money, everything else is credit. This morning I said Bitcoin is money, everything else is credit.
Throughout this discussion, Saylor has painted a picture of Bitcoin's future not just as an investment, but as national infrastructure. From the historical analogy of land purchases to the rise of corporate adoption, from its boring institutional phase to its ultimate role as digital gold, the strategic Bitcoin reserve is framed as both inevitable and essential. He reframes Bitcoin's lack of yield as strength, and he sees its adoption driven by necessity and principle alike. Now it's time to hear from you. Do you think the United States will move forward with a strategic Bitcoin reserve? Or will hesitation leave the door open for other nations to claim this new digital frontier?